The story in Nigeria right now has been the bull run of the Nigerian stock market. It's up 9% year to date. That's a 38-week high. And of course, last week was a very, very, very good performance. We saw it up 2.5% on the back of market's reaction to the results which we've seen from the banks. Joining me in the studio to take a good focus on the banks today is Adeoluwa Omotola. Is an analyst with ARM Investment Managers. Adeoluwa, let's start with your thoughts on the Q1 numbers which we've seen from the banks and the impact that's obviously having on the sector. But highlight for us in your thoughts the key takeaways from those Q1 numbers. I know last year there was a lot of thought about expectation at the start of the year that it will be a good year, but then of course we got surprised by more NPLs. But this year it seems to be starting pretty well.
Yeah, it has been a series of very impressive results. I think feeding off from what you talked about last year, most of those concerns about provisioning seem to have moderated a bit with the tougher stance that's been taken by the CBN in terms of aggressive loan book cleanup through 2011. But for the most part, it's been a very stellar set of results. Driven mostly by strong top-line performance. We've had costs stay a bit elevated, but most of that has sort of crystallized into bottom line. As far as revenue is concerned, it's driven mostly by taking advantage of the high yields on government securities, as well as some of the single-hand loan book that we saw through 2011. Interestingly, some of that loan book has been masked by sales to Hamcon, which sort of made the underlying growth stronger than what it appeared to be on the balance sheet. But in terms of much higher rates on both loans and on both government securities, we've seen that basically drive top-line growth, and we've seen that feed through to bottom line. So
after all we've seen so far, which stocks do you like the most, starting with the Tier 1 banks?
In the Tier 1 category, we still like First Bank. We think it's a very good play. Tier 2 category, our preferences are mainly FCMB and Fidelity Bank. Fidelity in particular being a compelling valuation play. They're yet to release Q1 results, but we're looking at price to book of 0.3 times. We're looking at PEs of less than 5 times. We're looking at a company that has over the last 1 year sort of been proactive in creating organic growth in terms of what they need, in terms of footprint. You're seeing Fidelity's cost of funds trending somewhat lower than the average Tier 2 bank, and we think that stands it in good stead going forward. But First Bank being the main pick out of them all, it's basically a story of scale. It's clearly the largest bank. They've taken advantage of the high yields, deployed a lot of money into that space. We're talking investment securities portfolio of almost 700 billion. Also look at a situation where historically there's been a trade-off in terms of service as well as price for First Bank. But over the last 2.5 years, there's been a lot of investment in that space in terms of improving service delivery, upgrading branches, getting staff talent, and we're seeing them aggressively price corresponding to
let's
that.
look at the overall sector again, and I want to get your thoughts on this. Last year, we did get surprises from NPL, so that was a risk. This year, what are your thoughts? Are there any risk out there that you think we should keep our eyes on that may just surprise us to the downside?
I think one of the clear lessons from last year was that the Nigerian equity market is increasingly integrated with the global market. In as much as we were expecting good results last year, it wasn't a very strong global environment. Perhaps a bit fortuitously, the results in Q1 are sort of tied into what appears to be an increasing mood of optimism on the global front. Clearly, if you have a reverse on that front, it's definitely going to affect the Nigerian market. Unfortunately, those are not risks that we can control, but I think that's perhaps the biggest downside that could materialize. All
right, time's up, but very quickly, outlook for this quarter. You just talked about the positive move in the global scene. Your thoughts on to what extent this bull run, which we've seen, 5 weeks bull run, market's up 9%, do you think it can be sustained?
The bull run driven really by strong financial results. Banks are very overvalued from where we stand right now. Even with
overvalued or undervalued?
Undervalued, right. Pardon me. Even from the uptrend that we've seen. Basically, we can show where the base effect in terms of higher yields will last through at least until Q4 this year, which was when the CBN really went aggressive with rates last year. So we're likely to see very strong year-on-year performance in terms of results. We think that in terms of prospects, still for the banks, looks very strong. Opportunities to grow credit. We think it's still going to be strong.
Hopefully we can see this rally going on. That's Adeoluwa's wrap on the bank results.